Well, Dipan Mehta is with us now to take some questions. Dipan, good morning. Good to have you here. Thanks very much. The market's looking a little tricky now, isn't it? Especially with what happened last night in the US. I don't know if you saw, off 52-week highs, the market suddenly reversed. Sharp reversal, 2.5% kinds. Yields have jumped. There is this Bank of Japan meeting this morning. Your thoughts near term?
Yeah, good afternoon, Prashant. Thank you for having me on your show. So I think it's a great time. The bull market is taking a pause over here and you have a chance to rebalance your portfolio. If you have excess cash, then that also can be deployed. I think these sort of corrections are healthy. They remove some of the froth from the market and provide an opportunity to buy stocks at your prices rather than chase them. So far, I'm very pleased with the earnings season. And on the whole, I think the economy is quite buoyant. The bank profits are reflecting the underlying strength in the fundamentals of various sectors. And I'm pretty comfortable with this correction, looking at increasing exposure as and when opportunities arise.
Okay, Dipan, hi, good morning. So I just want to get your thought on yesterday's big newsmaker. That was Mahindra and Mahindra. The market kind of gave its verdict in terms of the confusion, the lack of clarity on why. The big question is really why. But till we get that answer, what is your advice on the stock?
Good morning, Surbhi. I think that there is some explanation, some logic as to why they are buying the stake. And even if they are buying it as a portfolio investment, I think it should do very well. We have seen RBL Bank's numbers for the past 2 quarters, and they've been quite impressive. They're not growing at much higher than the industry growth rates, but at least they are doing responsible lending, and the bank NPAs have been completely cleaned up. All the top management issues have been resolved. So even if M&M, which has got significant surplus liquidity, just looks at it as a pure treasury stock, even that is perfectly fine. But I thought the correction in M&M stock price was a bit overdone. And maybe, it's a good opportunity and M&M, by the way, has been performing really well. It's a good opportunity this correction is a good opportunity to get into M&M stock. We are very positive on autos, and M&M is one of our top picks over there. Having said that, it's a company in which we and our clients are invested. So I'm not too perturbed about this decision. I think it's an opportunity for entry into M&M stock.
All right. Dipan, good morning. Dipan, you've not been a fan of cement, but yesterday ACC came out with a set of numbers, and I'll tell you what, those numbers were stellar. We're not talking about a 10, 15, 20% beat. It was close to a 30% beat in comparison to our estimate as well as consensus estimates. What's your view on the stock from here on?
Yeah, Nigel, I have to admit the numbers were exceptionally good. Even Shree Cement came with very good set of numbers. Apart from that, broadly, I think cement has disappointed. In ACC, I think it is this entire one-time structural cost, changes which are taking place for the better. And if you look at the numbers, the actual raw material cost to sales have gone up, but all other costs, transportation, other expenses, employee costs, they all have declined significantly. And the jump in operating profit margin clearly is the magic which is there in ACC. I expect Ambuja also, could report similar set of numbers. And that was the thing about ACC and Ambuja, that, their cost structures and their margin structures were higher than the industry. There were more efficient players like Shree, Ultratech, and JK. And now I think ACC and Ambuja are playing catch up under new management. So this could be a kind of a one-time adjustment taking place in the operating profit margins. But from there on, I think industry trends will prevail. And we are very clear about the industry trends not being that favorable. Despite 20% type of volume growth, the margins and the actual operating profits are flat. So that shows increased intensity of competition, and every company is going in for massive expansion. So this situation is not going to change. So you may have a trading rally in ACC and maybe even Ambuja as well, but I'm not getting attracted to those stocks at this point of time, and we maintain our underweight view on cement.
Got it. We had to discuss Pharma, Dipan, so we'll let you think about that. Just coming back to you on that.
Dipan, yesterday's big mover, of course, was Pharma. What did you make of this huge rally? I mean, Cipla, for instance. Your thoughts on this one or any other pharma stock that you like?
See, I think by and large, pharma companies are reporting decent numbers, and the cyclicality which is there in the generics business is showing an upswing because of certain changes which have taken place. I hear that there are some bankruptcies in the US generics market because of which the competitive intensity has reduced. And I think this is typical of any cyclical businesses. You have the ups and downs. And right now, I think they are seeing a cyclical upswing. But even that notwithstanding, I think Indian domestic market also has supported a lot of pharma companies. And specifically with Dr. Reddy's and Cipla, they have this para 6 exclusivity in one particular drug, which has resulted in super numbers for those two companies. I think that this is the beginning of a mild upswing in pharma stocks. And from a neutral to underweight position, I think investors should get into overweight position in pharma next 2-3 quarters. Look very interesting. And I think what goes most in favor of pharma stocks is that it's a largely under-owned sector, considering that the past several quarters have been disappointing for many companies over there.
Okay, got that. Dipan, thank you very much for joining us this morning. Always good getting some perspective from you.